Our vision for the event is to give you a chance to learn from others and take away some new ideas and thoughts and meet and network with peers across the industry. As an organisation, we have historically been known for providing a range of data products, and over the last 4 months we're actually laying out a strategy to actually provide more value add capability and touch points for our clients, especially our tier 1 clients. And we call that strategy sort of building out, heading north, providing more value add over and above our pure data products. So that's things like APIs, that's things like portals and so on, and that will sort of your teams and your touch points from Ordnance Survey should be communicating with that over the coming months. So we're obviously keen to listen from these kind of experiences to the kind of challenges and frustration and business needs that you have, to make sure that they are addressed in our thinking as we develop out our widening capability. And also, we're very keen to think about how we could work more effectively with yourselves in terms of addressing some of your strategic business needs as well. I know there are a number of people around the table that we've actually had some very in-depth conversations around how we could actually work more collaboratively in a whole range of different vehicles and ideas.
I was going to talk a bit about the underwriting approach here, because I think what we're faced with is we've got an awful lot of new information, but can we rely on it? Okay, now I'm not questioning the validity of OS or anything that's provided here, but 2007, 75% of our flood losses weren't in DEFRA high-risk zones. In the recent flood events, some of our largest losses weren't in the 175 zone, they were in the 1 to 200, they were in that next batch up. And I just wonder whether things are as up to date as they need to be. Nobody can really absolutely accurately model the impact of Victorian drainage systems, fields that were previously soakaways now being car parks or housing estates. I think it shows that we need to maybe be doing a little bit more than getting a set of postcodes with some scores against them and blindly accepting that we need to adjust our rating in line with those. I think we're quite fortunate, and we do have our own team of risk control surveyors, so we've got that local knowledge, which I think we closed a lot of branches, as did a lot of other people, and that does lose you that local understanding. But also, during an event, don't just be worrying about the claim, be worrying about your underwriting. Be looking at what your information tells you and use that to improve the quality of your underwriting going forward. We write quite a bit of business, and in some places, capacity runs out. We have big reinsurance treaties, but if you look at City of London, for instance, there are areas where we are so exposed, as are other insurers, that we need to be really, really careful with granting cover. Okay, we also take a MPL approach as opposed to an EML approach, which is, without getting into detail, a bit more cautious approach in terms of how much a fire, for instance, is going to cost us. And that means, as I say, that we do bump up against capacity limits from time to time. We also are part of a French organisation, so they set these nice little rules where we have to not only do a good job, we need to have to show it as well. And if you take a simplistic MPL approach and what our Parisian friends would like us to do, frankly, the Great Fire of London happened, and therefore it could happen again. And therefore, is it one risk virtually? I exaggerate for effect, but there are big areas where if we weren't able to justify that we aren't overexposing the company, we would have to write less business. So what we're working on now is a blocks approach, whereby we go beyond where a building is and get into the detail of what blocks of exposures we have around a particular key risk, and we make some fundamental assumptions about spread. So it is unusual, rare, it never happens, you might say, that fire spreads equally in all directions. So actually being able to use this sort of software and say, right, that's our key risk, and it'll either go this way, this way or this way, not everywhere. Therefore, using that to adjust our capacity means that we can write more business whilst feeling protected. And another thing I should mention with regard to that aspect, and also in terms of the flood modelling, is reinsurance costs are bloody expensive. You know, if you look at your average property account, it's probably 10% for cat and risk, if not more, depending on, you know, how you buy reinsurance. And therefore, giving your reinsurers confidence that you're managing exposures appropriately can save you on your reinsurance, and therefore can put you in a better position in terms of pricing competitively to the front-end customer. Underwriting precision, I just like this picture really in terms of, you know, targeting the right risk. But it's not just about targeting the right risk, it's also about getting your rate right, okay? And a lot of the conversations I've been having recently have been about, you know, using that granularity of information that you have to get that price much more where it needs to be. I think, you know, there's a danger that a lot of pricing is you know, half science, half market trading, and there's a danger with that you just pick up the business where you're cheapest rather than where you've priced it appropriately. By using the geocoding software and going way beyond the postcode, we were able to write 8% more business. So 8% more risks move from being unacceptable or unattractive to attractive. You know, relatively straightforward. You've got a postcode that's in a flood risk zone, stuff at the top of the hill is lovely, stuff at the bottom it gets a bit damp. So being able to use it in this manner and being able to use it automatically, because what we do is we make this tool available to every single one of our underwriters in all our branches. So we build it into the automated personal lines in automated commercial line systems, but we also give it to the underwriters so they can see in detail the risk that they're looking at and price appropriately. So we can write 8% more business. We've reduced our flood exposure by 18%. God knows where they got that number from. Frankly, I think that's understating it. Certainly when I look at the personal lines book, the work that we've done, I think, has reduced our flood exposure by probably 50%. Probably 50%. Now, when we write flood business, we tend to do it via brokers who do a better job at managing the individual risks than we do, one of whom is in this room. So, you know, that's great. And in terms of just efficiency, by being able to build our data into a geocoding system and updating things overnight and running things automatically, we apparently saved £3 million. Everybody's looking for new bits of data. I love this slide. Just because you're unique does not mean you're useful. And the big challenge for insurers these days is to find something that is going to be truly useful and is going to enable us to improve our rating. There are 8,000 publicly available data sets from the government. You have to tie them into something to be able to use them. And the best thing to tie them into, in my opinion, is a geo-reference. Yeah, that's that one constant. So there's lots there, as well as the obvious property things in terms of smart meters. You'll see lots of conferences on smart metering. I'm not quite sure what they cover because they don't tend to be focusing on insurance, but smart meters are a massive area. And if you think power consumption, whether it's personal or domestic, that must have a bearing on the risk. Fluctuations in voltage, you know, electric fires are a big source of claims for us. So being able to use that information, using it to understand the risk and also, you know, predict the likelihood of fires, I think is very useful. The reality is your competitors are getting better at big data, and therefore you need to move with the times and get better as well. You need to be targeting the right customers, choosing the better customers, pricing more accurately. If you don't, somebody else will. And I think, you know, we will have tools coming online which will enable us to share information with our underwriters. So when I talk about the underwriter of the future, there's a lot of technology helping. I do think that a lot of bottom-end business will be written by a machine. Therefore, the underwriters in your branches, whatever, will have to raise their game. They will be focusing on the more complex risks. So they'll have to spend some time going out with the risk control engineers and surveyors so they actually have a bit more technical insight as well. We're doing a few proofs of concept with OS currently and looking really at what sort of information do we have that might have an impact in a pricing model? And on commercial lines, a bit more esoteric, but a line I think you used earlier on, just gathering a load of data, lots of data sets on buildings, and then getting together to discuss, the art of the possible.
There's 8,000, 10,000, there could be 20,000 data sets out there at a geographical level that we could possibly use. And the trick is trying to work out which of those data sets might actually be predictable for our property claims, for our motor claims, and possibly even liability claims. We need to sort of start thinking about what kind of data sets would we use. I've just put a few up there. There's thousands and thousands, but for property insurance, you can get a data set telling you where all the fire brigades are. So you can work out how far away the risk you're looking at is to a fire brigade. So you would hope that if a fire started, the damage would be less because the fire brigade can get there quicker. You can get data on where the police stations are. There's probably not much theft and arson within 100 yards of a police station. There's lots of things like that. Indices of multiple deprivation, unemployment. There's all the census data. You know how many people are living in an area. You know how many cars there are. We had a bit of a think about motor insurance as well. Rather than just looking at crime stats and accident stats, what other physical factors lead to having a higher frequency of motor accidents in any particular geographical area? So we started to think, well, the weather conditions. When there's a lot of snow around, it could go two ways. There could be less cars on the road because they're scared of driving, but the cars that are on the road are going to have a higher frequency of accidents because of the snow. You can have visibility type data like rainfall. So in areas of high rainfall, you've got visibility issues when you're driving around. You've also got stopping distance issues. Potentially, areas of high rainfall might have higher frequency or higher severity on their motor insurance losses. Ordnance Survey, as part of their development, have now got a geointelligence division, which actually can do the same thing as these third-party suppliers. They can provide multiple data sets and do some of the statistical analysis as well. So that's kind of the thinking that we're going through at the moment, is trying to work out which of these data sets to use and how they impact on which particular perils for which products. Fourth way is probably where insurers are potentially trying to go to now and in the future. So a real-time lookup from the insurer's policy system to this source data. So in your policy system, the underwriter types in the address, pushes a geo-risk button, it fires off electronically to a third-party supplier, does all the fantastic jiggery-pokery, comes back with 3, 4, 5 different scores, or maybe a combined score, and it goes straight back into your system, and it can work out the rates, the rules, the endorsements, the referrals, the declines, straight from that. So you can do that real time. OS address-based, that is a requirement for doing most of this stuff, certainly methods 2, 3 and 4. Method 4, that's the future of geographical insurance. If you're going off to get a geocoding score, you might as well go off and get some other big data that's not geographical as well. So some company's house data or some credit data or whatever else you need. That fourth one is all tied up with the quote enrichment piece. The geocoding is just kind of a part of that, a part of the quote enrichment. It's telling you stuff about the risk that you didn't necessarily know.
I think this is the simplest way that we've managed to be able to encapsulate Flood Re within one slide. And the concept behind it, if we start in the middle of this slide, Flood Re is a reinsurance entity standing in its own right, its own company, its own legal entity that will provide a facility to allow insurers to cede high flood risk homes at a capped premium at a set cost to offset that risk. And that's the arrow of flood premiums going into Flood Re from high flood risk homes. Flood Re will use that money to pay out claims, but clearly if that's capped at an affordable level, that's not going to be enough money to pay the claims for high flood risk homes. So the other source of income for Flood Re is an industry levy on all insurers who underwrite household insurance in the UK. Throughout any year, a second levy or a levy 2 capital call may be needed in order to top up that scheme, and that again will be levied on insurers who write household premiums in the UK. This is essentially what it means for customers. But that outlines the premium levels capped by council tax band for customers. So that's essential both for insurers in terms of being able to know at point of quote, when will they be able to seed flood risk into flood re? And in order to do that, they will need council tax data. It also means that effectively, customers should not be paying more than these amounts for the flood insurance part of their household premium. Flood re will also be able to offer a standard excess of £250 because that is what the excess that flood re will impose on insurers that are seeding properties into it. So we would imagine that £250, because it doesn't make sense not to in a competitive market where others can come in and undercut you, will be passed on to the customer. And that's the theory around how it will work. To be clear, the eligible properties have to be insured in the name of the individual. They have to have a council tax band, and they have to be occupied by the owner or their immediate family. And it will not include homes in council tax band H or I in Wales at the moment. It will not include homes built after January 2009, and it will not include small businesses or residential landlords.
I've been working quite closely with DEFRA and the Valuation Office Agency since around Christmas time, when we were engaging with them around the understanding the licensing methodology for the supply of data to insurance sector under the flood re policy, which has now been enacted in the Water Act 2014, passed through Parliament in May. That allows Ordnance Survey address space addressing and the unique property reference number, UPRN, along with the VOA's council tax data, council tax banding and the date the property was built, to be shared with the industry so they can work out what properties would be eligible to enter the flood re scheme. The other sort of collaboration, if you like, that's happened recently is Ordnance Survey has been asked by the Cabinet Office to build a sort of web map viewer called Resilience Direct, and that will be used in disaster recovery and scenario planning, and it is a simple web tool that will be available to all Category 1 and Category 2 responders in order to be used during an incident to sort of join up and have a common operating picture of the situation. We also are involved in the National Hazards Partnership, which is more than just flooding. It can include landslips, etc. And also the Environmental Service Science as a Service Partnership. That's got a wide range of bodies involved, and that's around getting access to government data, scientific data that can help make better decisions if it's mashed up or analysed and put together. And I would suggest that Ordnance Survey as a sort of facilitator in these partnerships could be a key sort of channel or enabler for the insurance sector to get access to that data set. So I would suggest that the insurance industry come and talk to Ordnance Survey, give us your challenges, if you like, what problems and challenges are you trying to solve, and then see what Ordnance Survey can go away into government and find out what data is available and see how we can perhaps represent some of that information.